what if you could own a piece of your favorite companies like Apple or Nike and make money as they grow? That's the core idea of the stock market, and it's not nearly as complicated as you might think. Imagine you own a successful lemonade stand. You want to expand and build a huge factory, but you need money. So you decide to divide your company into 1,000 tiny pieces, or shares. Each share represents a small slice of ownership in your business. When you sell these shares to the public, you raise the money, or capital, you need to grow. Those little pieces are called stocks. So why would anyone buy these shares? Two main reasons. First, capital appreciation. If Chloe's lemonade factory becomes a huge success, the value of the whole company goes up. That means each individual share becomes more valuable. You could then sell your share for more than you paid for it. Second, some companies share a portion of their profits with shareholders. This is called a dividend. It's like a thank you bonus for being an owner. Now, where do you buy and sell these stocks? You can't just walk up to Apple headquarters. This all happens on the stock market. Think of it as a massive global auction house where buyers and sellers trade shares. The most famous of these marketplaces are called stock exchanges, like the New York Stock Exchange or the NASDAQ. They connect buyers and sellers electronically, ensuring the whole process is fair and orderly. So what makes a stock's price go up or down? It all comes down to a simple concept: supply and demand. If more people want to buy a stock, high demand, then sell it, low supply, the price goes up. Conversely, if more people are selling than buying, the price goes down. It's a constant tug of war based on what millions of investors believe a company is worth at any given moment. But with thousands of stocks, how do we know how the market is doing overall? We use a stock market index. An index is like a curated basket of stocks that gives us a snapshot of a particular part of the market. The most famous is the S&P 500, which tracks the performance of 500 of the largest U.S. companies. If you hear on the news that the market is up, they're usually talking about an index like the S&P 500 hitting a new high. Now, it's crucial to understand that investing isn't a get-rich-quick scheme. It involves risk. The value of your shares can go down, and you could lose money. There's market risk, where the entire economy takes a downturn, affecting most stocks. There's company-specific risk, where the one company you invested in performs poorly. And there's even inflation risk, where your investment gains don't grow faster than the cost of living. So, how can a beginner get started safely? First, build a solid financial foundation. That means having an emergency fund and paying off high-interest debt before you invest. Second, you'll need to open an investment account. Online brokerage accounts make this easy, and many have no minimum deposit to start. Third, and most importantly, one stock, don't put all your eggs in one basket. Index funds or instead of buying just one stock, consider investing in index funds or ETFs. These are funds that hold hundreds or even thousands of stocks, giving you instant diversification. Remember, the stock market can be volatile in the short term. But historically, over long periods, it has been one of the most effective ways to build wealth. The key is to think like an owner, not a gambler. Invest in great businesses for the long haul, and let the power of compounding work its magic. It's not about timing the market, it's about time in the market. The stock market is a powerful tool for your financial future. It turns your savings into investments that can grow with the world's best companies.
StockTaper turns complex financial data into clear, plain English insight, instantly. Everything is presented in a clean, focused interface, designed for long-term thinking, all in one place, and get alerts, earnings call, analysis, and breakdown. See the bigger picture at a glance with institutional ownership, ETF exposure, and signals that help you spot market shifts before they develop. StockTaper, stock research that finally makes sense.